So that brings us to our next guest analyst, Mr. Craig Bolanos. He's a co-founder and wealth advisor at VestGen Wealth Partners up in Chicago. Craig, thanks for being on.
Hey, good morning and a happy Friday. Hey, can I just tell everybody, let's do a breathing exercise. Take a deep breath. The S&P is only down 5% from its peak. That's it. And I've got news. Bull markets don't go straight up. They back and fill. I think this is normal.
I agree, but here are the stats. So turn your head and hold your nose if you don't want to hear it. But yesterday, the Dow swung 1,100 points from top to bottom. The S&P, 236. The NASDAQ, 1,104. And the Russell, 100. That is ugly. How about this? The Mag 7, 1,675 points top to bottom. So it was an ugly day. And on the charts, if you're a chartist, that portends a lot of weakness. But I have a feeling we got to watch Bitcoin, Craig. I don't know what you think about that, but Bitcoin's kind of dragging everything down with it today. It's down again. I don't know if we'll be able to shrug it off, but we're around 83,000 in that Bitcoin. It was not too long ago. We were at above 120, so we've taken off 35 to 40% of that price in a pretty quick period of time.
Well, and we've seen drops in Bitcoin like this so many times in the past. And I think it's just a matter of challenging the concept of scarcity. Everybody knows that gold is a tested in the trenches storage of value, but I don't think this move downwards in Bitcoin is the death nail at all. I think there is so much momentum relative to digital currency, and Bitcoin remains something that's going to be supportive. This is just nothing more than a classic technical failure. I mean, when Bitcoin broke through that big support that you said at 106 and then down through the 95, it makes sense that this thing's fallen into the mid-80s. I think long-term investors who want to have an alternative storage of value should be looking at this as an opportunity to finally pick some up. Everyone said Bitcoin wouldn't go to 10,000. It did. They said it wouldn't go to 100,000. It did. What if it goes to 1 million? Just saying.
I love you for your optimism. The other thing that I think kind of put a little bit of a damper on things yesterday was, I don't know how you say this like I'm going to say it, but a good jobs number put a damper on rate expectations, and that kind of also popped the balloon a little bit. What do you think?
I actually thought the jobs number was Goldilocks for me. I mean, it wasn't too hot. It wasn't too cold. This is really just about a reset, not of AI enthusiasm. This is just a reset of AI capacity, right? Are we building out too much capacity? I think the answer to that is no. And for all the, naysayers out there, all I got to tell you is the third quarter stats, earnings season, it was good. Balance sheets, they're good. The consumer spend remains strong, even if it's driven by all the upper income cohorts. Small business growth, it's moderating, but the employment remains steady. You just mentioned that. So, hey, what's not to like here coming into the end of the year, especially when markets are going to climb a wall of worry?
I think one of the most surprising things for me over the last 3 or 4 days was after that government shutdown. What was the official tally? 43 days? Was that it? I don't know.
It doesn't matter. We set the record, right? We set the record. That's all that matters. It's
right.
Record breaking. Someone called Guinness.
But I think that Atlanta Fed GDP at 4% growth, I thought was going to absolutely have to be revised lower, and they came out and revised it higher, 4.2. What do you think about that?
I'm not sure about any of the government math these days, but if anybody thinks we're in a contracting economy, they're wrong. And that's what I'm hearing. I'm hearing all this talk of bubble. I'm hearing all this talk about a contracting U.S. economy. Someone show me the data. I just don't see it. So as far as the GDP goes, hey, not a nothing burger, but just another data point to confirm for me that the U.S. is still on top.
Yeah, we have a lot of smart people on my show. You're one of them. But they've been saying a long time that this AI stuff is for real. The balance sheets are for real. The money behind it is for real. And there's definitely not a bubble in AI yet. And there's more of a bubble in AI talk than there is an actual bubble in AI. And they're all full steam ahead. Now, yeah, you're right. This is a normal move. We've had a lot of folks on the show saying that they've been expecting something like this, and now they're getting it, and they're adding to a lot of their positions, and that's fine. But I'm undeterred. I'm with you on that. I think that brighter things are to come, and I think the first and second quarter of next year are going to be great. And I think that Scott Bessent would agree with me. He's been saying that as well. There's a lot of things in that big, beautiful bill that have still yet to take some traction. We definitely have and whether the Fed may or may not cut on the 10th, right? But they definitely are going to be on a trajectory lower. We're not going to see rates going higher, so that's going to be.
Yeah,
Go ahead.
we're not seeing rates going higher, and I got to jump in on that bubble concept one more, Scott. Guys, all this bubble talk, that in and of itself is market supportive. When investors are on a bubble alert, it's pretty tough to see a major market meltdown. I mean, I'm not saying it can't happen, but steep corrections tend to occur when everyone is bulled up, overly bullish, and completely offsides, meaning they're all long. Guys, I got news. That's not where we're at. Because everyone's looking for a bubble, because everyone's negative, because everyone's been thinking the sky's been falling for the last 3 years. We're not in a bubble.
Look, I agree 100%, and I'll end on this. You don't know this, Craig, but 25 years ago, I was a director. Well, I was a board member of a publicly traded company on the London Stock Exchange, which was a technology company right in the middle of that last tech boom we had. I saw everything from the inside out. I was actually having to hire programmers. I was in the middle of it all. I saw it, and I'm telling you, yes, there are some things that are kind of similar, but there's way more things that aren't similar at all. And these companies that we're looking at today have real balance sheets, are backed by real money. They're making money, nowhere near like it was back 25 years ago when we were looking for eyeballs and clicks and maybe some revenue if that happened. But it's not like everybody keeps trying to tell you that it's 2000 all over again. What say you before we go?
Yeah, it's not 2000 all over again. I mean, I won't be surprised that we'll eventually put ourselves into a bubble. I won't be surprised that eventually happens. Things ultimately go pop. That's how free markets work. Bull markets die with what? Irrational exuberance. I haven't felt irrational exuberance for a very, very long time. So get out your shopping list, everybody. There might be some more pain ahead. I think we're churning, but based on the data, this thing's going to continue to power ahead and defy what is common logic, but it's not going to defy the math. The math is all supportive.
Yeah, don't look at your 401k for the next week. Enjoy your family. That would be the best prescription for your health this week.